Hello and welcome to Business Incorporated Live on Channels Television. It's still the last trading week of January right here in Lagos, Nigeria. Here's what's coming up. Global markets brace for the U.S. Federal Reserve's first rate decision of 2025. What's it going to be? A cut or hold? And Egypt issues $2 billion with its first dollar bond deal in almost 2 years. Plus, Liberia is projecting $3 billion investment in a mining sector following a new minerals discovery. And it's great to have you join us. I'm Ladi Williams. Let's get a check on the markets now, starting with oil. Oil prices dipped today after rising U.S. crude stockpiles and easing concerns about Libyan supply. That's shifting the focus to potential U.S. tariffs on imports from Canada and Mexico. 1.1%, big drop, $76.64 a barrel. With what we're seeing so far, it might be a weekly loss for oil prices. U.S. WTI, $72.98 a barrel. On Tuesday, the White House confirmed that President Donald Trump intends to impose a 25% tariff on Canadian and Mexican imports starting Saturday. So we're seeing all of that impact the oil market. To other commodities now, gold prices were steady today as the market participants were cautious ahead of the U.S. Federal Reserve's interest rate decision that's due later in the day, while also pondering the implications of President Donald Trump's trade policies. So we're seeing spot gold down slightly at $2,758 per ounce. The gold futures, that's flat at $2,794 there. And other metals we track unchanged for spot silver, still holding on to that $30 level. Platinum, $941 on change. Palladium, though, that's down big, 0.8%, $947, losing that $1,000 psychological level at this time. So that's the picture there for the metals market. To other stories now. The Debt Management Office in Nigeria says it raised the sum of 669.94 billion naira from the January 2025 federal government bond auction. This amount is higher than the 450 billion naira original target to come from the auction by 219 billion naira, and also higher than the 360 billion offered in January 2024, as well as the 120 billion offered in December 2024. According to the DMO, the auction saw strong investor participation across the three tenors offered, with competitive yields reflecting prevailing market conditions. Then we see Statista is projecting that the machine learning market in Nigeria will reach $570 million in 2025, with an annual growth rate of 34.62%, resulting in a market volume of about $2.52 billion by 2030. This suggests that adoption is already accelerated and more Nigerians would have to revolutionize to fit in. Country manager of Zoho Nigeria, B. Ogundare, shared this perspective as a guest on Business Morning earlier. Take a listen.
This is 2025, and a lot of businesses don't do business as usual. You need to find a way to adopt technology, and AI will significantly improve your efficiency. Now, when you talk from efficiency standpoint, people will see that you'll be able to do more, cover more ground, reach out to your customer, personalize their experience. Because I was telling somebody recently that in 2025, people are more concerned about their experience at a particular store than the good itself. The experience and everything, and you'll be able to manage that and optimize that with AI in 2025. We believe that the best application of AI is when you don't know you are using AI. Because the AI is the buzzword. Everybody wants AI, but a lot of businesses today are currently using AI without them using it. When it comes to your sales management, they will tell you the right time to call your customer, the best time to send quotes. They help you optimize that. They help you create data, make sense of that data, and then you can use that data to actually target your audience without you using it. So yes, and that is the best approach to using AI when you don't know you are using AI currently.
All right, now to our first conversation. The U.S. Federal Reserve prepares for its upcoming interest rate decision. That started yesterday. Markets are closely watching for any signals that could shape global economic conditions. A change in U.S. interest rates, that definitely has a ripple effect worldwide, influencing everything from investment flows to currency values. Well, joining us to unpack this is Dr. Pelumi Olanubi. She's Executive Director, Kingsgate Advisors Institute, joining me via Zoom. Great to have you on the show. Happy New Year. It's been a while.
Been a while indeed, Ladi. Good afternoon. Good to be here.
Yeah, great to have you. So all eyes are on the U.S. Fed for the first meeting of 2025. What are your expectations? Consensus right now is should be a hold, but I'm sure investors would also be comfortable with a cut. What are you seeing?
All right. It's really an interesting time we had, definitely, with the Trump administration on board and all the policies that began to roll out. It's really an interesting time, and I can see an unprecedented time in the sense of what is happening. And before I even go straight into what the Fed the stance of the Fed, what it might be, let's see some of the policies that have been rolled out in last week that the Trump administration has actually come into play. And three of these policies that really stood out that can actually have impact on the Fed's direction is policies related to tariffs, like you rightly mentioned, related to immigration, and also the one related to tax cuts. For tariff, as everyone is expecting, the Trump administration already signaled that they're going to increase tariff by 10 to 20% for imported commodities into the U.S. across the globe and by 60% from China. What this would mean is it has the potential of leading to an overeating. And overeating simply means when an economy is growing too fast. The reason is because there will be more demand for domestically made produce, and this can lead to have inflationary impact. And we've seen that the U.S. economy, okay, that's on one side. Also on that side, looking at the immigration policies, the administration has also signaled that they are going to, sort of deport as high as 11 million people in the space of 4 years, and that would affect the labor market, put a lot of pressure on the labor market. In the words of Oliver Blanchard, one of the foremost economists in the United States, he said if you discount that and see how that will affect the labor market, it can have an impact leading to increase in unemployment by about 5%. And if you ask me, that's a huge number. And that will also lead to wage increase, which is also inflationary. And the last point that I'm coming from is the issue related to tax relief. This would also have impact the debt, the budget deficits, the budget financing, debt level, and of course, the United States is a very big economy, and generally, analysts and economists are not speculating to enter into what we call sovereign debt. But I mean, anything is possible, right? But looking at it on a more cautious view, we are expecting that, economists generally, analysts, and even markets, they are expecting the Fed to still take a wait-and-see approach in this time. Although we have seen inflation inch a little between November and December, and we can also say that the U.S. economy, to a large extent, has stabilized, looking at unemployment levels, inflation rates, and even growth rates. In fact, the growth rate has proven resilient. So we might still see the Fed taking a cautious approach and see what all these various uncertainties, as most macroeconomists call it, how it pan out and plays into the economy going forward. So right. We might see the Fed still holding rates, seeing how all this pan out.
So even though it could be a hold, I'm sure investors will also be looking out for pointers. Maybe it's a hawkish hold or a dovish hold at this point. They'll try to read between the lines going forward. But you did mention, deportations. And, that brought to my mind, at this point, we're still trying to get more diaspora remittances, going forward. So with the drums of deportation getting louder, what are you seeing for, diaspora remittances, going forward from the U.S. to Nigeria?
I mean, looking at the policies and everything that would happen in terms of, especially when it comes to immigration policies, this can affect some of diasporans that are actually in the United States. I'm not saying Nigerians, but we still have a number of Nigerians that are under risk of being deported. That would affect the inflow. But generally, if you see the interest rate still around the current levels, this will still help in diaspora diaspora inflows and also even portfolio investment beyond diaspora inflows. Also, the fact that the labor market in the United States has been resilient, and we've seen some of these returns, from diaspora coming into the economy, coming out from 30 December and all that. So we can still see this positive sentiment in that sense. We can still see this positive inflow of diaspora remittances, given that we expect that there will still be a caution impact.
And I hope the immigration laws, favor Nigerians, so we can also have a bumper Dirty December come 2025. We're still celebrating the one from 2024. But back to the rates now. Let's imagine a hold or maybe a rate cut, later tonight in Nigeria. How do you see this impacting, capital flows into emerging markets like Nigeria?
Right. If I hear you clearly, Larry, you are asking if possibility of rate cuts impact Nigeria, right?
Yes, how that would impact capital flow, into Nigeria.
Oh, okay, great. So if the Fed, as we've seen, in recent time, the rate cuts, the dovish stance of the Fed, it has a positive outlook on the Nigerian economy. Given that Nigeria is a small open market economy, and our interest rate now is becoming more, I would call it more attractive, to foreign investors, and that's why I've been seeing this inflow of rates. But if we don't see a change in the direction of the Fed, given that probably inflation begins to inch upward, and they might want to still hold on to their mandate of price stability and targeting towards the 2% benchmark, that can of course lead to strengthening of the dollar, which might affect Naira depreciating further, affecting capital inflow, and even our debt servicing and our debt obligations to the rest of the world. That's not generally a good outlook, given our precarious state already that we are in. But we just hope that as the event pans out, the Fed will still keep their dovish stance. This will help Nigerian Naira, in international markets, and of course eventually we raise bonds or raise any other debt financing. Our obligation will not be higher compared to when the dollar strengthens.
Right, and also we're all bracing for the first meeting for the Central Bank's Monetary Policy Committee. That's for sometime in February. So we're getting the first one already for the U.S. How do you see this impacting, that's a decision today, or influencing Nigeria's central bank's approach to managing inflation and stabilizing the Naira?
Yes, truly. We expect direct, because there's this saying that when the US coughs, when the US sings, the whole world coughs, right? So we expect that there will be this trickle-down impact on whatever the direction of the Fed is, by the end of today. For Nigeria, for the NPR, for the MPC, we still expect that, because the CBN, they are clear as to their fight against inflation, reining inflation, and all that. It's a different talks as to talking about major drivers of inflation in Nigeria. But of course, conventional monetary policy will tell you to keep raising interest rates, which is good for the Naira in the sense of attracting portfolio investment, like you said earlier, and as we discussed in the last point, it's good for the Naira. But going forward, if we see a reversal, that's when we can begin to see this reversal also in the trend of portfolio inflow, which will affect the value of the Naira further, and also lead to more inflation through imported deflation and all other direct impacts that this has on an MPC and their monetary stance.
So I guess at this point, if the U.S. Fed holds rates at this meeting or cuts, do you think it helps the Central Bank of Nigeria actually maybe hold in the next meeting?
Yes, it's likely that the Central Bank actually holds in the next meeting. I don't see a reason why the Central Bank would decide to probably cut rates at this point. There is no motivation to cut rates, looking at what inflation numbers are. And of course, also bearing in mind that the CPI rebasing would also have an impact on what the inflation numbers are. Some would argue that it would rather reduce than increase. And of course, that might motivate them to now change their trajectory. So there's a lot to unpack in this in the real sense. And let's see what the outcome will be, given that they are also expecting to see this number to affect their decision. But the word on the street is not so much on what NPR is, or what the monetary policy is, the word on the street is this going to drive down prices? That's the most important thing to consumers in particular right now. And that's what they really want to know, not so much as what the rates are. But of course, generally, the markets are looking at the possibility of moving back to the dovish monetary policy, because we see inflation, by the new numbers coming down, that can be a motivation to start cutting rates in Nigeria. And that will support businesses, that will support economic activities, and probably support growth rates to higher levels.
Right. I guess so much to look out for in 2025, and we've seen projections from different experts and advisors, and most of the time it's been quite optimistic forecasts we're seeing for the Nigerian economy in 2025. Do you think it's going to get easier for the central bank to tame inflation as we get ahead?
I mean, looking at the last couple of months, how that the inflation had actually declined before we now saw the increase again. And inflation has been increasing, but not at the same pace when it was really running high. So this shows that then what the CBN is doing in terms of raising interest rates has a minimal impact on reining inflation. It's almost general knowledge now in Nigeria that we know that the factors driving inflation are more structural in nature than monetary in nature. And that's why you're not seeing that much impact as we expect to see on reining inflation. So as we begin to see more pull or more weight from the physical side of things, and we begin to see more as the naira begins to strengthen, given the low interest rate that we have in developed economy, that would also help in the pass-through effects and all that. So we actually have an optimistic view in that sense, and we hope that inflation rate will keep coming. But I personally don't see that 15%, but we see that downward trajectory. Also, base effect will also have a role to play in the inflation rates that we expect going forward. So it's more optimistic, really. But we are not seeing that. I'm not hoping to see that 15%, but at least inflation should hedge closer to 20%.
All right, definitely. We need more. We need consumers to get some kind of peace, when it comes to most of these prices. But thank you so much, Dr. Pelumi Olanubi, Executive Director, Kingsgate Advisors Institute. Thank you for coming on today.
Thank you for having me, Ladi. Thank you.
All right, we'll take a break now. When we come back, we head to the markets, get a sense of how the expectations, that's for the U.S. Fed meeting, how that's shaking up markets in the global space. That's in a moment. Just stay with us. Welcome back. Well, let's head straight to the markets now. So much to unpack with earnings piling in. That's for listed stocks right here in Nigeria and other global markets that we track. We're having John McQuarrie with the details now. What's playing out? Great to have you.
Ladi, I saw you looking forward, thinking I was still at the NGX.
Yeah.
Just to inform you, I'm back
here.
in the studio.
Yeah, you're back.
Yes.
Yeah, it's good to have you back.
All right, Ladi. Good afternoon, everyone. This is the market segment of Business Incorporated. And of course, we start from Nigeria, where we've seen a recovery from the red close that we had at the NGX yesterday. So now for intraday, we saw that the all share is back, again 0.10% intraday to hit 104,000. We seem to be hovering between 102,000 and 104,000. I look forward to the day when we'll have maybe 110. So we'll be safely out of the 100 lower part. So it's 0.10% intraday at 104,063.53. For Johannesburg, it's 84,874.75. Also in the green at this time. We'll go to Egypt, where the close of yesterday deeply positive that we see 0.98% in the green, 29,936.84. Nairobi for Tuesday's close. So they're still, I was just thinking, when are they going to leave the 132 level? 132.28 is what we see at the close of Tuesday's trade. 0.13% there. So just before we leave Africa, let's settle on Nigeria and see what's happening on the floor. Well, I don't know if we should say on the floor of the exchange anymore. It's now more virtual activities that we have. We have Richard Akimola doing is equity trader with CSL Stockbrokers. Hi, Richard. Good afternoon, and thank you for joining us on the program.
Good afternoon. Thanks for having me on your show this afternoon.
Great. So what's going on trading now? We saw more results. Aradel has such an impressive result. But when I was talking about the impressive results coming, somebody drew my attention to the fact that a lot of companies recorded losses last year. So the previous year. So even if they do have 2024 full year looking impressive, they are yet to offset the losses. But we see, or rather, just tell us how investors are reacting to the results we have seen so far.
Okay. Thank you once again. As you've rightly mentioned, we are in the earnings season and we continue to see numbers coming in from different listed entities. As we mentioned, we've seen Aradel number coming into the market, and a closer look at the figures, right, it shows that it is a very impressive result, right? We saw the revenue up about 163%, and profit after tax was up by about 361%. EPS about 57 naira, 57.03 naira. And I think this is an impressive result, and we've seen the market reacting positively to that result. Currently, as I'm talking to you, Aradel is topping the gainers chart. It's up by about 10%, trading around 594 naira at the moment.
So with this, do you see, because yesterday we saw, I think all of the counters were in the red except for oil and gas, and it was Aradel. Do we see that happening again, or do we see especially banking recovering from the fall of about more than 1%, I believe, at the close of yesterday?
The outlook for the rest of the day should be like a positive one. Currently, as you mentioned, the market is up by about 60 basis points, and speaking to the banking index, right? The banking index is up too. We saw Stanbic actually supporting that. The banking index is up about 64 basis points. We saw currently Stanbic is up by about 9.9%. As you know that their rights issue is ongoing, and I believe investors are going to lean towards the banking names because we are expecting their numbers to come into the market any moment from now. And looking at their Q3 numbers, most of the banking names, we saw strong numbers in their Q3, and we believe that they are going to build on that. And we didn't expect nothing more than a very good result from them, and even a very fantastic dividend by the time the results are out.
All right, so it does seem like investors are moved by the results that are being released.
Yeah, so at this moment, right, we currently what investors are after is, we're expecting year-end result, and we know especially those dividend-paying names, right, that is going to shape the market going forward. Even though, if you look at the fixed income side, right, we saw that yield are very elevated, which is supposed to be like a disincentive to the market, but we know that some of these banking names, right, they come with a very good dividend payment. If you look at some of them, their half-year dividend payment, we saw a significant improvement in their half-year dividend payment. So we are expecting them to actually up their games in terms of final dividend payment. So because the prices are already elevated, and we are expecting that the yield, right, the dividend yield should be very impressive, right, if we don't want to see the stock price being depressed. So we're expecting a very good dividend from especially the tier 1 banks.
All right, Richard Akumoladu, equity trader with CSL Stockbrokers. Thank you so much for giving us a view of what's going on in the markets at this time.
Thank you for having me.
Now let's see what's happening in the Middle East. We see mostly negative, I believe. Dubai closed at 0.90%. We know it's closed at this time because of the time difference, as well as Abu Dhabi. Abu Dhabi is on the flip side, 0.12% at 9,560.89. The Tadawul, Saudi Arabia, closed higher after on gains of agriculture. And when I was reading this, it actually caught my attention. So you have stocks from the agriculture and food, real estate development. We know we have telecoms and IT or ICT is also moving here in Nigeria. But it's a challenge for the Nigerian exchange to diversify. So after banking, oil and gas, it does seem, that you don't have a lot of movement or strength in the market. So, it would be nice to have some companies, equities and food and agriculture and all of that. But that's it. And for that, but for other parts, we have, of course, the Tadawul. Tadawul is in the red, 0.12%. That's Saudi Arabia. And then Qatar is on the flip side, 0.05% at the close of trade. Let's move over to Asia and see what's happening in Asia. We see Japan and Australian stocks rose, of course, connected to Wall Street. And I know Ladi did have a conversation on the Fed and the expected decision from them. Nikkei is up 1.02%. I think mostly is expected to be a whole decision just to bring some kind of stability into the market. So we see for Japan, it's 1.02%. The Kospi is also looking green at 0.85%. Hang Seng is 0.14%, 20,225.11. That's it. And then minutes from the Bank of Japan's December meeting released shows that members discuss neutral interest rates. Seems that's it now, just to try and get some stability. Shanghai is 0.05 in the red, and Nifty of India is 0.90. Ladi, I wonder if my time is exhausted. I see some signals from you right there.
US. Yes. Yes. Okay, so we still have United States. No, I thought, you had to jump out of there. Okay, so we have the United States. Yes, with our big President Trump, still his big stick is still right there. We see Dow Jones in the red, S&P in the green, Nasdaq also in the green. The fight around deep state is not over yet. I can tell you that Nvidia is still down. I think it recovered a bit yesterday, but for today it is down. It's reduced, but. We do have Maria, to tell us a little bit about what happened yesterday. Oh, you see, I said it. I knew that Ladi was giving me some signals. Ladi was giving me some signals. AI fight. At this point, I'm sure investors are just watching what's going to happen next with investigations by Microsoft. Yeah,
and investors are not loyal. They're only loyal to profits.
Exactly.
So, if China does it, let's look the way of see. China.
And maybe some more overreactions. Mm-hmm. Thank you so much, Amy, for giving us the details. What's playing out with most of the markets that we track. But let's take it on to the UK. Now we have Juliana joining us. Great to have you, Juliana. So we see Chancellor Rachel Reeves has given a major speech on her plans to grow the economy. That's the UK economy. What sound bites are you getting?
Good afternoon, Laddie. Yeah, that's right. It was a really big speech, really important speech by Rachel Reeves, the Chancellor. It's just wrapped up, actually, in Oxfordshire. And now we've got Sir Keir Starmer, the Prime Minister, pretty much defending the embattled Finance Minister during Prime Minister's questions. And I say it was an important speech because following the autumn statement, the budget she gave, I don't think things have been doing economically quite well for the UK. She's really struggled. I watched her statement from beginning to end, and while credible and full of really good context, and potentially, if implemented, these reforms could turn around the UK economy, I just think her delivery wasn't convincing. And, at a time when we've got really big rhetorics coming out from the United States, our biggest ally, it's important that we can match that punch. And I'm just not sure Rachel Reeves is doing that. But aside from that, what was it about? It was a speech to focus on growth and stability. You'll remember, Laddie, a couple of weeks ago, we were discussing Britain reaching its highest borrowing costs in a decade. And I think that's because lots of investors and city analysts are fearful of some of the plans that Rachel Reeves has, which includes increasing the national insurance contribution for businesses who are already struggling with high interest rates. I think the biggest headline to take away in terms of optics from Reeves' speech this morning is that she backs a third runway for Heathrow Airport. As our viewers will know, Heathrow, one of the busiest airports in the world, for at least 3 decades now, British parliamentarians have been debating whether or not they should have a third runway. I suppose the biggest opposition to that has always been the environment. But look, I think Britain needs to remain competitive. And this is the first time we've heard publicly the Chancellor saying that that's what she wants to happen, which would potentially create over 100,000 jobs. And of course, we know billions of pounds worth of revenue for the UK economy. But again, already critics online are saying, look, this is just another very long-winded investment strategy, which is really the basis of lots of Rachel Reeves' ideas. I think now economists want the cost of living to go down today. They don't want to hear the blame of the past 14 years of the Conservative government, and they don't want necessarily long-term infrastructure. They want solutions to today's problems, and I think this could be a huge issue for the partnership between number 10 and number 11.
All right, I guess so much to unpack from that speech, and we'll see how investors react to that. But are the markets saying anything?
Yes, although these are sort of pre the end of Reeves' speech, but again, still positive territory. DeepSeek, that rout on the tech market, hasn't really hit more of the services-focused blue chip index in the UK, so it still remains in positive territory. The all shares up 0.21%. The FTSE 100, Laddie, that's up 0.32%. And the FTSE 250 domestic market, that's up 0.55% at intraday.
All right, so did you get a chance to use DeepSeek? I know you were trying to download it yesterday. How was it?
I used it. Got to tell you, not as great as the other alternatives. However, I understand the fear. I think the fear is simply that they have done it. But in terms of what is available, you can't beat Open AI at the moment, although there are others available. But yes, I did. I asked them a couple of questions. In fact, I asked them who's Juliana Olayinka, and they had no idea. So it was all downhill. It was all downhill from there, Laddie.
They should know who Juliana is, at least, at this point. Thank you so much.
That's a good thing.
Well, we'll keep tracking to see how the investigations go by Microsoft and OpenAI there. Thank you so much, Juliana, for giving us details on what's playing out right there in the UK. All right, let's take it on to Europe now. With only weeks left until the federal election in Germany, political parties are campaigning and calling for reforms they think will resonate with the voters. Let's look at the one proposed reform there, which is tightening inheritance tax and reforming the wealth tax. For more on that and things are currently running, let's talk to Vada Emrah there in Berlin. Great to have you, Vada.
Great to be here, Laddie.
So let's start with the inheritance tax. Is Germany strict with that?
Well, many of Germany's billionaires, so the richest people here, inherited their wealth. Germany has dynasty-style businesses and properties which are handed down generations, and they avoid paying much tax on it, and they're quite successful. On paper, the current inheritance tax law aims to tax 7 to 50% of the inheritance. However, rarely is this in practice. One way to avoid this is to put your wealth in a business or a family company so you can abscond this tax by saying the wealth is already invested. Another way is to claim an exemption based on need. So let's say if you inherit 26 million euros and you don't have the money to pay the tax to collect this inheritance, then you can claim a need-based exemption. The argument is that you are needy for this money and can't afford the tax required. So as you can see, there's various loopholes that allow the ultra-rich to avoid paying this tax. And sometimes the tax they do pay is just 1 or 2 or 3%. So I would say it's definitely not strict enough.
So I guess taxing the ultra rich is a big challenge for everyone at this point. But do you think with a reform in the law, do you think that would bring some kind of change, in that practice?
Well, Laddie, it really depends on how keen the government is on collecting these taxes, right? Speaking about a wealth tax, for 100 years, Germany had a successful wealth tax. And then in 1997, so late 90s, it was suspended and kind of never picked up again. According to German state media, ZDF, Germans have around 18 trillion euros in private wealth just sitting there. The SPD, which is current Chancellor Olaf Scholz's party, has said they want to reactivate this wealth tax and tighten the inheritance tax so they can add billions to government spending. However, other major parties like the far-right AfD, they want to slash this revenue by billions. So if such a policy does come to the forefront, the divide between the rich and poor here in Germany would be so big, and it would have major consequences for the German people and the economy. And speaking on the economy, already there are growth forecasts that have slashed for this year and also for the next. And this is from the government and also entities like the IMF.
All right, we'll keep tracking that. Let's turn to the markets now. What are investors looking at today?
Well, shares here in Europe hit a record high this morning as Dutch chipmaker ASML led tech stocks higher after they published strong quarter results with better than expected bookings of 7 billion euros. And so the pan-European stock 600 is up 0.7%, rising past a previous all-time high. Euro Stoxx 60 is up 0.9%. ASML's own shares jumped more than 11%. This assured investors that AI chip companies are still doing well as investors and traders are still reeling from Monday mayhem. Semiconductor companies also gained quite a bit here in Europe. Investors are also keeping a close watch on data. German private consumption numbers are out today in a consumer survey by market research groups, and it says that people are likely to save more this year and not spend as much. The consumer climate is gloomy. Investors are also watching developments across the ocean as the U.S. Fed interest rate meeting is later today in the day, as well as earnings from major U.S. tech companies. German index DAX is up 0.8% and steady, and within the DAX, Mercedes-owned Daimler Truck Holding was leading with 5.8% jump in share price. And that's all from here. That's all from us here today.
All right, I guess investors have a lot to look out for, the U.S. Fed and earnings coming out at this point. Thank you so much, Vada, for the details.
Thank you, Laddie.
All right, let's get to North Africa now. See, Egypt have issued $2 billion with its first dollar bond deal in almost 2 years as the North African nation emerges from its worst economic crisis in decades. The bonds were split between $1.25 billion of 5-year notes, yielding about 8.625%, and $750 million of 8-year debt, yielding about 9.45%. Investors had placed almost $10 billion of orders by the time the final terms were set, as according to that's the management office there. With emerging market bond sales, it started briskly in January with Saudi Arabia and Mexico among those coming to the market. Activity stalled in the past 2 weeks, but we're beginning to see most of those countries there tap those markets. All right, to our next conversation now. In today's fast-paced world, crafting impactful narratives and driving meaningful change are essential for organizations aiming to resonate with their audiences and achieve their goals, whether it's telling a compelling story or tailoring messages for diverse audiences or leveraging the power of digital media. Well, join us to unpack this now is Davis Bianekwan, is a communications specialist. Hello, Davis. Great to have you.
Hello, Laddie. Thanks for having me today. How are you today?
I'm fine. All right, let's talk about strategies now, for crafting impactful narratives, driving that meaningful change, because I'm sure most of these companies now are just trying to put on their thinking cap, for 2025 to see how they can, keep those customers coming. How are you seeing it?
Yeah, it's an interesting time these days. As the case may be, as an organization, you want to be able to emphasize the importance of emotional connection and be able to create a sort of narrative that resonates with your audience. And in doing this, you want to be able to give a compelling storyline. Using storytelling techniques to achieve all of that. You want to be able to use metaphors and vivid imagery in getting this done. And what is more important in doing that is it brings out a trust, from your organization towards the audience. Another aspect that's quite important in using in the strategy is incorporating AI. AI has proven to be far more beautiful in these recent times in terms of getting audience attention and all of that. Platforms like TikToks and Netflix, they sort of like curate content with sort of behavioral data to make stories more engaging for the consumers. And also, as an organization, you want to be authentic in the sense that you want to stay true to what your course of an organization, of what your brand fulfill in terms of what your consumers need. And so far, studies has also shown that 80% of consumers, they trust content that feels human over just corporate messages and all of that. So in all of this, the takeaway here is just your brand should be able to advocate and should incorporate real life experiences, into their messaging, and just to create an emotional balance and connections with their audience.
Right, and definitely we've been talking a lot about the macroeconomic headwinds at this point, with most consumers going through a cost of living crisis. Do you think telling a compelling story is still effective, even though there's a cost of living crisis with consumers dealing with inflation and all of that?
Well, the truth of the matter is, to be fair, yeah, nobody really cares about stories, your story. But then when I find my story in your brand, I sort of like want to be able to associate myself with the brand. Organizations, the truth is, brands must actually use storyline, to be able to pass across this message. I might not be able to care about stories you're telling me, but then if I can find myself relating to that, I would want to obviously just get into it and associate myself with your brand. And the fact that even with the higher cost of things, I still think a lot of people still get away with that and still come on, to come up upon the brand.
Right. So talk to me about the role of digital media, in shaping most of these organizational goals and messaging. I did see something interesting happen on social media recently. I saw two brands, battling it out there, with the consumers, and one brand calling out the other brand, saying their customer service is better and all of that. Is that what we're going to be seeing in 2025?
Well, the truth of the matter here, Ladi, is that it's an healthy competition in terms of branding, as the case may be. Digital media has sort of come to reshaping the industry, unlike how we used to have traditional ways of, doing advertisements and reaching our end goals as a business. Digital media has come to transform the communication landscape. It enables organizations right now to be able to engage directly with their audience in real time, more like it allows for two-way communication, feedback, and the dialogue. You are relating directly to your consumers. Your consumers is relating back at you. This sort of like shaping organizational goals and the messaging that it brings upon them. Digital media also it provides a sort of organization with valuable data and insights. This enables them to refine their messaging to target the particular audience that they want to get to more effectively. And this sort of like measure the impact of their communication efforts. And so far, social media is now being utilized for that social impact. A study, I think in 2024, Elderman Trust Barometer report showed that over 72% of consumers now expect brands, to take on stand on societal issues and all of that. So using AI as well and data to create tailored content strategies can actually put this on and getting user-generated content. So in all of this, I feel these are certain ways that digital media has been, playing a larger role in this.
Right. And, talk to me now about measuring, the success of, most of these digital media campaigns and initiatives. Do you consider the success, if you're working with a platform that has over 3 million, subscribers or viewers? Is it like a no-brainer once they have the following, once you put your brand there, you just expect you're going to hit your audience?
Measuring success these days requires a whole lot. And for me, I used to tell people you have to have a clear objective of what you want. Gone are those days. We've gone beyond success story. We've gone beyond just focusing on just likes and shares. We should no longer do that. It's just not enough these days. You want to engage with your clients too much, with your consumers in a more depth insights. You want to have good time spent and sentiment analysis as well. Measuring this success requires clear objectives, like key performance indicators and analytical tools. Organization these days should also specialize and establish sort of specific, measurable, achievable, relevant, and time-bound, which is a smart objective for their digital media campaigns. They should also track their KPIs such as engagement metrics through website traffic, and conversion rates, and also sentiment analysis, as the case may be. We must just go beyond vanity metrics and just measure just through engagement. An example for this would be the way Netflix tracks your watch time per user, not just views to determine the success or the content success. You should always use advanced analytical tools like the Google Analytics and like Brands24 to assess qualitative impact. Also, you can also use a case study-driven performance metrics to do this. Success stories are the new currency we have these days. Audiences in the real world want to be able to apply their own form in it and see themselves getting these abstract numbers and gather them just to show them off. For example, what LinkedIn did was as a thought leadership impact study found that companies, they invest in leadership-driven content. And this saw sort of 58% increase in conversion rates. And this has actually gone beyond what we used to have in the past. And some solutions for this would just mean that we can document and showcase campaign success through storytelling at the end of the day and data insights, Ladi.
All right, I guess you put it there. Success stories, that's a new currency right there in that market. Thank you so much. It was great having this conversation with you. That was Davis Bianakman as a communication specialist. Thank you for coming on today.
Thank you very much for having me.
I see Liberia is expecting $3 billion in investments following the discovery of new mineral deposits. According to the president, this development comes as a result of studies funded by China, revealing that the nation, traditionally known for iron ore and rubber, also possesses reserves of uranium and lithium, cobalt, manganese, and other minerals. Negotiations are ongoing with multinational corporations and local investors to mine these newly discovered minerals and inject capital into the associated sectors such as energy, infrastructure, and technology. And talking about technology now, let's get a check on what's playing out in the crypto market. Now we're seeing, we did see a recovery, but that's turning out to be red at this point. Things might change very soon. We know this market trades 24 hours, 7 days, always trading, investors trying to cash out of this market there. So we're seeing Bitcoin down about 0.41% at the time of taking this data. Ethereum, 1.94%. So we're still seeing weakness there. Investors bracing for what the U.S. Fed will do with interest rates later today. Let's get some headlines now. We see crypto mining stocks, they plunged for the second day. And with most of those stocks, the crypto mining stocks, they face heavy losses with major tech stocks that began, that was on Monday, but we're still seeing some kind of recovery in the market regardless of that. Then we also see the Czech Apex Bank now, they're mulling reserves about 5%, putting away 5% of Bitcoin in their reserves. That's according to the Czech National Bank governor. They're making a bold move at this time that no Western central bank is taking so far. So it wants to put Bitcoin in the country's reserves, and we know Donald Trump has hinted at such a move, at this point. Then the U.S. Fed, that's the first meeting for 2025. Everyone's waiting for that decision later today. We know they have the consensus at this point is it's going to be a hold, but definitely investors might be happy, with the cuts. That's for investors in risk assets. They're bracing for that, and that's why we're seeing weakness across the board there for price of Bitcoin and most of the altcoins that we track. So all eyes on this. It could be priced in. It could be priced in. At this point, that's for the decision by the U.S. Fed. That's if it's a hold at this point, because they have to see what's playing out. With a new presidency with Donald Trump, and he's been asking that he wants interest rates lowered. That's putting pressure right there on the U.S. Fed, because they also want to see how President Trump's policies impact inflation, because at the end of the day, it's all about battling inflation. So investors will be watching out for this decision today. Is the market going to react negatively or positively? We'll definitely find out. But with most in the past, after the rate decision, there's always huge volatility, leading up to the meeting. Then after the decision, there could be some rally there. That's for Bitcoin and most of the altcoins, depending on forward guidance. Investors watching out for what the U.S. Fed is expecting, going forward. So they'll be looking out for all of that. So yes, that's on the agenda right now. This will definitely be driving sentiment with what we're seeing in the market right now. So we did see huge liquidations on Monday. That's from DeepSeek there, when they brought that news about them doing the whole AI business even better than the US and NVIDIA. We saw NVIDIA had the biggest one-day drop ever. That was on Monday. So we're seeing that recovery, but with Microsoft now investigating to see if DeepSeek actually used their data in preparing or producing that platform. If that investigation goes right, then we might see tech stocks and maybe cryptocurrency actually rise on that note. But we also see Alibaba there also getting into that AI conversation with their recent launch. Now they're saying it's going to be even better than DeepSeek and most of the platforms. So all eyes on Alibaba at this time. We're already seeing some cryptocurrency platforms there already launching names according to most of these AI platforms. We did see the one with DeepSeek. So right now we're seeing BNB, that's holding up 0.91%, down $670. Cardano still lost that $1 mark, not far away from there. We'll see if it's going to try and get back to that psychological level. Big 3.05% drop for Cardano. XRP holding up $3. On Monday, it did fall below $3 with the whole DeepSeek route, but it's back above that, trying to holding up about 9 cents, 0.99% down. So Ethereum there with the second biggest move down, $3,137. So I'm guessing if you check for the futures market now, the longs might not be looking so good, right now, because we're seeing weakness. But who knows, when China wakes up, we'll see if the sentiment is going to change. So for the Fear Greed Index, 72 points. It's still a greedy market at this point, but we'll see if this greed continues with all of the volatility that we're seeing right there in the market. So that's how most of the markets are looking. Thank you so much for watching. That's it from me and the team right here at Channels HQ. I'm Ladi Williams. Bye for now.